Federal Reserve just cutting interest rates again by 25 basis points. But the real headline is that Chair Jay Powell signaling the Fed may be done for now. Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-host Lydia Hu, Brian Brenberg, Jackie DeAngelis, and with us for the entire hour, Fox Business's Charlie Gasparino. Great to see you.
Thanks for having me.
So this was the Fed's third straight cut, but it came with division inside the Board of Governors and the most dissent we've seen in 6 years. Two officials said the cut was not needed at all, while one argued for an even bigger move.
We made a decision today. We had, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in.
The Fed statement made clear they are trying to balance inflation that could flare back up just as the labor market weakens. Now, President Trump wasted no time slamming Powell, arguing the Fed should be cutting more aggressively to unleash stronger growth.
It's too slow.
If there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff. He did a rather, I would say, a rather small number that could have been doubled, at least doubled.
Markets now deciding if this is a pause for now and if or when to expect more cuts next year. So let's open it up. Charlie, we come to you. The Dow loves it at a record high.
My condolences.
The S&P close, within just a couple points, still very much of a record high. Your thoughts?
One thing, I covered Greenspan. That shows you how old I am compared to some people on this panel. He's less inscrutable than Greenspan. I could never figure out what Greenspan was saying, where he was going with this stuff, except, unless he made a comment like, irrational exuberance. But other than that, never knew. I think what he's saying here is that despite the sort of semi-happy talk, is that whoever's in the next Fed chair is walking into a maelstrom. I mean, we have a deeply divided Fed. Yeah. And here's where it's important that Trump picks the right person for this job. And, the odds makers are saying it's Kevin Hassett. Every CEO I talk to thinks it's Kevin Hassett who deals with the White House. I mean, who knows? I mean, he did another round of talks yesterday. Kevin Warsh, the academic former Fed governor, who is a person I think a lot of CEOs would like because they think he has a firmer hand. Hassett, if it's Hassett, it's going to be I think it's going to be really difficult to get consensus on the board. And some of it's not Hassett's fault. I mean, look at it this way. He's the NEC chair. He has to be a cheerleader for MAGA policies. He has to do what the president says, which, if you want to work for the president, which is demand lower rates. He has to plant the seed in both CEOs and the other members of the voting committee that he is favoring the one side of the dual mandate over the other, the growth, potentially inflation side over fighting inflation. And I think if they pick him, and I think if Trump is probably going to pick him, the next, these are going to be listen, it's going to be great for us because there's going to be a lot of news coming out of the Fed, but it's going to be a contentious time and fiscal policy is going to be a problem. And one thing I just can't understand is why Trump is so focused on the Fed funds rate. It is not the rate that matters. The rate that matters is the 10-year and the 30-year. It's where all consumer rates are poised off of, and they are completely contingent on inflation. And it's just like, this is the reason why I'm so freaked out. Like, I can't believe he's still on it. Let's say it was in March of last year. Scott Bessent, the Treasury Secretary, gave an address to the Economic Club of New York.
Yes.
Larry Kudlow was interviewing him. He said, I finally got Trump talked off the ledge on worrying about the short, I'm paraphrasing a little bit, worrying about the Fed funds rate. He should be worried about the 10. And Larry goes, really? And so I remember being on Larry's show that day, and I said, mark my words, in a couple of hours, Trump is going to be talking about cutting the Fed funds rate, and that's what he did.
Yeah.
So I don't know why he does
talk
that.
about yields a little bit? Because, Jackie, I made a joke. I heard a joke yesterday. Someone said, who should the next Fed chair be? And they said the 2-year yield, because the 2-year yield will dictate, and finally did after 2 years. The Fed funds rate finally matches what the jawboning of the 2-year yield in the market had been telling the Fed what to do, and the Fed finally caught up. And yes, finally matches the 2-year yield at a 3.51 today.
Yeah.
So does it really matter? And maybe an additional point to that, is dissent good? Should we be having a rigorous debate within the Fed? Is a lively dissent healthy?
Yeah. Well, okay, 2 big questions there. So I'll start with the dissent. I do think we should be having the debate. I haven't been a person that has said rates should be at 0, the way they were after the financial crisis. I don't think that's sustainable. I don't want to punish savers. I think there's a sweet spot where consumers can benefit from lower rates, but if the fundamentals of your economy are still strong, you're not at 0, because that would indicate that there's a problem. And so I like to see that stability going forward. So that's the dissent, and the debate about what's happening with inflation, unemployment, and the underlying economy is the conversation that we have, that they have, that we will continue to have, because it's fluid and it's constantly changing. To get back to the yield question and a little bit to what Charlie said, I think the president is looking ahead, because I think he wants the bond market and the Fed funds rate to sort of be in the same area. And I think he thinks that
So he wants a 10-year and the Fed fund. I mean, the 10-year is what matters.
Well, I think he wants the 10-year to come down. And I think that
he has no control over
But
the
I think he thinks it will. We were talking to Larry yesterday. Larry was predicting that inflation will come down from where it is, maybe 2.5% next year.
But that's the only way the 10-year is going to come down.
Right.
It's not going to come down because Donald Trump is lowering the Fed funds
I'm not
rate.
saying it is. That's not
Okay.
what I'm saying. What I'm saying is I believe that they believe that inflation will come down and the 10-year will come down, and it'll be somewhat more in line with where he wants the Fed funds rate. And
So everything will be great.
Right.
But it has to happen.
That's what I think.
Charlie.
I don't know if it's going to happen, but I think that's what they're thinking.
But when you have 3% inflation, it might not happen.
I know. I know.
Brian, I want you to weigh in on this, because the flip side of that, we talked about inflation, is the labor market. Jay Powell said that the numbers have been overstated by 60,000 a month. So here's the quote.
That's what he thinks, right?
Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by 60,000. So that would be negative 20,000 jobs per month. What do you think about that?
Well, first of all, they don't know. Like, they're off by that much with this birth-death model. They don't know anything. The job picture is a mess, okay? I know that E.J. Antoni didn't get in as BLS chief. They need something, because they're flying blind right now. But if he's right on that, then President Trump's probably right that they should have cut by half a point yesterday and not a quarter point.
Yeah, but if you have, so what you're saying, well, I mean, here's the
That is a fast deteriorating job market.
What is the cliche, the Gordian knot? Here's the problem you have on both sides. You have sticky inflation.
Yeah.
You have rising unemployment. That's called stagflation.
Except
There
that
was
what
only
if he
one way to get
says
rid of that.
The one-time price increase from tariffs will be resolved, he said, about
said?
Jay Powell.
Jay Powell,
Yeah.
okay.
9 months from when you start
And
talking
he's-
about it, which peaks early next year, and then we can all move on and inflation falls towards the end of next year.
And they lowered their inflation projections for next year, too. The Fed did. So it seems to me the Fed's tilting hard right now in the direction of the labor market's going to break worse than the inflation problem, and faster.
Correct me
if
if
he's
I'm
right
wrong.
about the jobs, if he's right about those jobs, then President Trump is right. Now, I hope he's not right about those
Myron was the
jobs.
only one who wanted 0.5%.
Yes.
Yeah. That's one person of
that's
the
his guy.
12.
That's
No,
Trump's
I
guy,
know,
right?
but I'm just saying, you need more. I hear what you're saying, that maybe he was right, but that's not what.
You see, the real
consensus
problem
is
we
even
have
close
here,
to.
I mean, if you think about it from a Main Street, because I was on Jesse's show last night in Waters, and he said to me, he goes, isn't the market going great? I mean, this guy said, Jesse, what's the average 401k? I don't know. Well, it's $135,000.
Right.
What's the one that's in the middle with 50%? What is that, the medium or the
Median is middle.
Yeah.
Okay, medium. What's the median? Because I always get that mixed up.
Mean is average.
Okay, so the medium, 50% above and below, is like 50,000. So average people are not really benefiting from what's the green on that screen.
Yeah.
Directly. Okay, you could say pensions and 401ks or whatever. But my point is, if you don't get the inflation stuff, or at least the price increase affordability challenge dealt with,
Yeah.
this is over. The Republicans are going to get wiped out, and it's going to be horrible politically for the president and all the rest of his agenda. And here's why. I mean, prices are still at sleepy Joe Biden levels.
Mm-hmm. Well, we said when they would go up, they'd never come down.
But here's the thing. You have 3% on top of that.
Hold on.
Come up from 2%.
And I hear you.
And here's the problem. What is the wage picture? I mean, it's all mixed. Every time I look at these numbers, it looks like...
Well, we talked about that a little
Somebody
bit.
sitting in your chair yesterday
Gas
had a pretty
prices,
rosy view on that.
$2.94.
What did they say? What did the person say?
5%
2%
nominal.
real, 2% real wage increase.
Is that good, bad? I don't know.
That's good.
Whatever.
Good.
5% nominal.
Okay, what if
Over
you have...
3% inflation.
Lydia, weigh
people
in.
don't feel
Kevin
good about
Hassett
that.
earlier
prices,
this week with
$2.94.
Larry Kudlow said supply-side
Depends on where you live.
economics means deflation. The Fed can cut if we're looking at deflation, given all the supply-side economics that are coming online next year.
And that seems to make a lot of sense. The one point that I was going to pick up is when you were mentioning about inflation, because I heard Powell say that too, that the expectation that peak inflation is going to hit sometime, I think, Q1 of 2026, right? I felt like that was a little bit of a kind of a change in what Powell has been signaling. Wasn't it just in the last meeting when Powell said it's not a foregone conclusion that we would get a cut this meeting right now?
Yep.
I felt like that was a change for Powell too. You couple that with the jobs picture, which I think we got a little bit of a clearer picture even today when jobless claims came in higher than what was anticipated, which is not good as well. So I'm kind of squaring the expectation that we're not supposed to expect any rate cuts for next year with what Powell just said with inflation peaking, moderating, which is good, and also a jobs picture that looks like it might be getting worse.
Quickly, the flip side of that, continuing claims plunge.
Right. Listen, I mean, these numbers, for me, it's hard to sort of draw sort of 30,000 feet meta conclusions from all this stuff. Except one number has remained constant throughout this whole debate.
What?
And that's job approval rating on the economy for the president has been down, and that people don't feel good about this economy.
Wow.
Now, I'm telling you, Joe Biden and his troops, because I was going face to face with them a lot over the years, tried to say average Americans were out of their minds, nothing was better, and they got blown out. And so you got to be really careful
Fair.
here.
Yeah, that's a
that
losing
is
strategy.
that is the real number.
Yeah, that's
Can we talk about a losing strategy today?
Okay.
Pull up shares of Oracle. I want quick comments from you guys on this. They came out with earnings yesterday. The shares plunged 13%. They have burned $10 billion in that November quarter, basically spending on AI data centers. That led them, as we know, to issue $18 billion of bonds in September, but basically saying that CapEx would hit about $50 billion in fiscal year in May, ending in 2026. That is $15 billion higher than initially projected. But some analysts, Charlie, said, well, we thought it would be $100 billion, so $50 billion isn't so bad. Lo and behold, pull up my chart of the day. I know we're short on time here. Net debt to EBITDA. So after you pay off all the cash to cover the debt,
Right.
net debt to EBITDA, a measure of profitability, 0 to negative for most of these companies, except for Oracle in red, higher. And that I'm wondering if that's the bigger story about that trend line going higher.
That's the driver. It's a heavier debt load for Oracle. Now, Michael Lee sat there yesterday and said, love where Oracle's sitting because the LLMs are all commodities, but what they're doing is the real source of value. So maybe it's worth it.
I mean, listen, this is a good company. I will say I only know this because I'm following the Paramount, the Warner Bros. Saga,
Yeah.
and Paramount, which is backed up by David Ellison and his father, Larry Ellison, the co-founder of Oracle. Larry Ellison's net worth has gone down amid all this, something like in the last couple of days, like $30 billion. So he's only worth now something like $230 billion.
Poor guy. Let me just make one comment. I love your chart because when you show that red line for Oracle, it gives you a sense of the debt, right, to the profitability, as you said. But wasn't it just a couple of months ago that Oracle had sort of popped one day out of the blue because they were talking about their spending on AI and data centers, and everyone said, "Oh, Ellison's so smart because he was sitting while these other guys are out there and they're clamoring about this, that, and the other thing. He's making smart investments. He hasn't been talking about it." So I'm just curious, kind of what changed in the view of investors that all of a sudden they don't think that's a great idea unless it's that ratio that we just looked at.
There's a huge short thesis on Oracle and all these AI companies right now that, investors, in some of this is short term. And one of the, just so you know, one of the things that, part of the short thesis is we don't have enough energy.
to power it all.
So
yeah.
they gotta
No, it's true.
start selling off, and we got to start recalibrating, valuation.
If
We
you
gotta
build
go,
it and it doesn't work, who cares?
Right.